Let's talk about Tuesday. Honestly, one of the most frustrating days you can have as a trader. Not because of a loss, but because of how little the market gave us to work with. Let me walk you through it. So here's the 15-minute chart just before the open. The key levels here marked by the London high and the London low. Now looking at the structure going into Tuesday, the market was sitting very close to the London low. And as usual, my plan was straightforward. Wait and see how price reacts at the open before committing to anything. Now this is what the morning session looked like around 11:30. And honestly, this chart tells the whole story of the morning. Pure chop. The market was bouncing around, no clear direction, and most importantly, no 15-minute family gaps forming. The market took the London low, consolidated for an hour, and slowly started pushing higher. For my strategy, a 15-minute FVG is what I need to have a tradable setup. Without one, I have no reason to be in the market. So I sat on my hands through the entire morning session, waiting for something to develop. Now, this is around 1:40 p.m. The entire day, from the open all the way to 1 p.m., produced zero 15-minute fair gaps. That tells you everything about the kind of day it was. Then finally at 1 p.m., the first gap formed. You can see it here, the 1 p.m. 15-minute FVG sitting right around the weekly gap high. When price came back into the zone around 1:40 p.m., I started watching the lower time frame for a setup. Zooming into the 1-minute chart, a short setup did form when price came back into the 1 p.m. FVG. I took the entry around 24,204 with roughly a 20-point stop and targeting 24,135, a 3.2 risk to reward. The setup was valid and the structure made sense. However, price came back up and hit my stop loss at break even. So technically no loss on this trade, but no profit either. A break even result on a valid setup is still a good outcome. Now looking at this 15-minute chart, you can see the 1 p.m. FVG zone and how price interacted with it. The market came into the gap, showed a reaction, but ultimately couldn't follow through on the short side. This is actually a good example of why break-even management matters. When the setup isn't playing out as expected, moving a stop to break-even protects your capital and keeps you in the game for the next setup. And this final chart sums up the entire day perfectly. Looking at the full Tuesday session, just one fair value gap formed the entire day in the 15-minute, and that was at 1 p.m. The whole morning was just noise with no structure to trade off. Days like this are actually important to understand. When the market isn't giving you anything to work with, the correct response is to do nothing. Forcing trades in a choppy, no structure market is how you turn a break-even day into a losing day. So Tuesday, one setup, break-even result, and the right decision to stay patient all morning. If you found this helpful, consider subscribing and I'll see you tomorrow.